Hey there, welcome back to the channel. So yeah, today going to be our stock market update for Friday the 20 whatever. um, so basically, yeah, we can go through the charts and stuff. I mean, really, it doesn't seem like very much really happened today. We had some more. The high. It's funny, the high beta stuff. I mean, nothing. It didn't seem like it really moved very much today. It was kind of boring, which is good. But so yeah, so let's just really quick. Let's go through the charts, then. I'll just go over there. Really don't feel like it, but we'll just go through the charts really quick, and then I'll complain about the Kevin dude. Okay, let's look at the Nasdaq for today. So today over here, up 1.24%. Hey, are we getting a W? Maybe, could be. Not much volume on that, but if we, once again, if we kind of look at the QQQ, I think the volume is showing up in the QQQ. Let's look at that. Yeah, well, it's okay. So yeah, so maybe we're getting a reprieve for all those people in the high beta stuff. So all those people that are in like the ARK, same kind of deal. Now ARK here didn't do as well. Let's just save that. Okay. So yeah, it's kind of like good. It found support there, but it didn't really go up very far. And then we have some Churchill, nothing. Doji means sort of like it really didn't do anything. And then today, a little bit of up on some of this end phase and like our Neo and our, look at this guy now, kind of found some support. But this stuff is, like once again, if you're out there and you're, I mean, I get it. Today was, even though you're down, like you're down 3% on Tesla, Neo, you're down 5%. So this is kind of funny. It's like, okay, was there pain there? But today was like didn't do much. It put in a new low. Yeah, you're down, but you closed within the bar of the previous day. So you really didn't make much progress. You didn't lose much ground, and you did kind of hold. You didn't like totally break and close poorly. You closed positively in the upper range of it. So you it was kind of a nothing day. The trend hasn't changed. You have lower highs and lower lows. So you're still in this downtrend and you still haven't really found support. I mean, maybe you're getting some early pull up there. So, once again, so we have our people out there that just are trading that like are just, the pain, like, why was there pain today? I mean, if you're pain and you're in all this high beta crap that's not doing anything, at least if you had some GME, at least this one's good, 1.6%. I mean, if you look at, if we look at the SPY here, what happened to SPY? Let's see, is this weekly? No, daily. Look, SPY had a great day today, 1.6%. That's wonderful. So today was a good day. So how could you be down 10% today when the S&P? I mean, if you're doing that, like, this is not financial advice. This is more psychology of investing advice. Maybe consider what you're doing wrong. Maybe you're doing something wrong. What the hell are you doing? I mean, I just watch these people on YouTube that just are like, oh, the crash continues. Oh, this is terrible. Oh, yeah, the pain continues. What pain? If you're in pain, you're messing up. You're screwing up. Like, look at today. So look at, even on the NASDAQ as a whole, you are up 1%. Even on the SPY as a whole, you were up great. You were up 1.6%. Even on a day when the 10-year yield popped up almost 3%. So the market went up in spite of the fact that the yields went up. So the market was like, okay, it's no big deal, right? And on a day when the dollar is, what did the dollar do today? Dollar kind of just hang out, didn't really make much of a move. So on a day like that, what's going on then? Why are people still kind of just not coming into these guys and pulling out of these guys? Well, the answer is, I don't know. And this is the problem. This is the fundamental problem. You have people out there that are like, hey, it's like these whiny people aren't buying these stocks. Why aren't they buying these stocks? These weenie babies Well, wait a minute. What the hell are you talking about, weenie babies? Just because people aren't buying your stupid stocks that you happen to freaking own? Are you kidding me? You kidding me? So, okay, so people didn't want to buy and jump into Neo today and it's down 5%. Oh, really? And that's a problem, but yet the S&P was up 1.6% today? Like, here's the thing. So this is what I'm seeing out, especially the Kevin dude. He is out of control, and if he doesn't get his act together, he's going to blow out his account. It's happening right now because he's out there. He's like, I have strong conviction, which based on what is like meaningless. Like, if you've had any decent amount of time in the market and you've been through an actual bear market and you've traded it, then you understand that convictions mean diddly. They mean diddly because things change, and when they change, you can't. If the market goes against you and consistently against you, then you're wrong. That's all it is. You want to like learn some psychology of trading. If you're not accepting that, then you're in denial. Okay, you're in bloody denial. That's what it is. Now look, I understand this thing may come back. You know, this thing may have found a low, and this could be a W, and this thing could pop right out of this 700, 720, this Neo, all these guys could. And you know what? That's fine. But you know, that's kind of like swing trading. It's like, okay, you had to minimize your risk when you broke the 50, and then you're waiting, and it starts coming up, and maybe you did some plays there, and then it's like, okay, you got to wait. And then, you know, now you have a W. So now if it breaks 46, it's like, okay, well, why should I buy at 46 when I can buy now at 36? Because the problem is you don't know if it's going to get back to 46. You buy it down here at 36, it might be at 26. You don't know. You got to stop having strong convictions about things about the stock market and companies. You cannot have strong convictions about them because, like, most of the companies fail. Most of the public companies don't go anywhere. They fail. It's like you run these numbers after numbers after numbers, and you're like, oh, this is going to be great. And then you just throw this huge multiplier, a PE of 30, but based on the growth rate, we use a PE of 50. And you're just throwing around these PEs, and yet the whole market is out there, you know, maybe has a different view of it. And so, you know, I get the contrarian. I get the contrarian part, but you got to be a hell of a lot more practical if you're going to be a contrarian. Because if you're up here buying stuff that doesn't have whatever, doesn't have earnings, and you're buying it and you're taking this kind of a beating, I mean, you're going to get your butt kicked. So let's go back, and I'm just going to play this game, and let's ramble a little bit about some of this other stuff. Darn it, stupid thing. Really aggravates me. Okay, yeah. So in today in one of the videos, the dude again just like, okay, so now he's like, okay, well, this ship now is stuck in the channel. Okay, so now this could cause delays of shipping of stuff through the Suez Canal, and they're talking about however many 100 billion per hour or whatever of shipping that's being delayed. It's like, okay, fine. And then, so of course, you know, he's pointing out that, well, okay, maybe this will pump up short-term inflation. And of course, that's going to freak the market out, and blah, blah, blah. And so we could see more pain, right? Okay. Maybe, but the other way maybe to look at it is maybe if all the stocks that you own, literally all of them that you own, require that there be low inflation and require that interest rates stay very, very low for them to have any value or for them to even have a chance of operating profitably in the future, then maybe there's a different problem there. You know, maybe there's a different problem. You know, there's this phrase, priced for perfection. And that's the question. You have something that's priced for perfection. And what is the probability of even a great company like Tesla living up to the perfection? I mean, they're going to miss. They're going to have problems. It's just the nature of it, the competition, everything like that. They're going to have problems. So there is no perfection out there. So, I mean, to me, it's just amazing. So back to, this is not financial advice. But so, my suggestion is that, we got to be a little careful. I mean, I'm looking at it, and I've got like the XLP and some spiders, and I'm just pretty well diversified on it. And I do have some fun stuff like little Grayscale Bitcoin trust. And once again, not financial advice, but like the market's just steady going up a little bit. So what's the problem? That's the other, see, here's the thing that kind of becomes really painful when you're new at trading. Maybe you've done it for a couple of years, and that's still new. And I know people are like, what the hell are you talking about? I'm trading for 2 years now, and I've made all this money, and I'm great. Like, okay, 2 years isn't a long time. The problem is because you're in like the middle, if you're in the middle of a 13-year bull market, which, I mean, that's the generation that we're in. We had the crash in March, but before that and after that, it's been nothing but bull market. So people have no idea about the tech crash, the financial crisis. They have no idea of like some of the bear markets in the 70s, and just no idea of what it's like to be in a market that's either not moving at all and you can't make a penny out of it, or to have a market that every time you see a setup for, it's like, okay, looking like it's finding its footing in it, and it just fails. You don't have the experience. Then what that means is you don't have the experience. So now what the heck does that mean? That means that you're pretty much, you may very well be pretty much a worthless freaking trader till you got 20 years in. And you know what? If you were out there and you had that attitude that, yeah, I don't know crap, and I've been doing it for 10 years, that would probably be a better attitude. I mean, maybe you would be like, maybe this is a point to question my conviction. Maybe it's a point to reconsider what I'm doing. So these are the kind of things that, that I see out there, and it's just amazing to me. And to be very clear, I don't have the answers. I mean, I don't have the answers. I don't know what to tell you to do, but I can just look at that and say that, like, okay, look, you can see the obvious flaws. And so the thing is, it's not that I'm right. I'm not saying I'm right. I'm just saying that you see people with no plan. It's like masked. It's like, oh no, I have a plan. No, you don't have a plan. Your plan, if that W breaks to the bottom and it goes down somewhere else, you have no plan. You're selling stuff at huge losses because why? Because you're on margin. You have no plan. You pretend like you have a plan. You put artificial numbers in your plan for losses that you think you can handle. But if those losses are more than what you think your losses could be, worst case, you have no plan. You've just got punched in the face, and you're kind of stumbling around, and you're in shock, and you don't realize what's going on. So I think that, that's kind of it for the stock market update today. Just I encourage you to be very careful. I sort of was debating doing a stock course, and I still may, but I think, I think my view is like, look, my stock course would be like what not to do. Like literally, I'm sort of debating, like I should create a course, and the whole goal of the course is to just kind of like urge caution. The whole thing is like, I'm just going to urge caution. So you're out there, you buy someone's course for $50, $100, you read a book for $4, and it's like, there's a lot of like really good stuff, and really in better trading strategies than I can come up with, and better investing strategies than I can come up with. But I think that, there's all this really bad advice out there, and I think the only thing my course would be about is like, hey, just think about this. Here's some things to think about. If you're following someone blindly, here's some things to ask them, like, with some of these guys, Kevin, like, well, do you have his actual P&L, actual profit and loss on all these trades, without saying that, well, I don't want to look at it every day because that's psychologically bad for me. Okay, okay, whatever. But, at some point you have to, I mean, you got to remember, if you're trade, like, and that's the thing, most of the people that are following these people on the internet they're really trading. They just want to trade. They don't have that much money. Maybe some of them are making 100 grand or something like that a year, and they want to do some stuff, but they all want to. None of them are millionaires. So what are they doing? They're like, look, I want to find a way to actually make money in the market. And how do you make money in the market? Well, you have to trade. You can't, if you're sitting there and you're saying like, hey, this is the thing. If you look like, Kevin, dude, he's in actually a different position. He should be in more of a preservation mode. He's already made whatever, his accounts he was showing, he's got 25 million in his accounts or whatever it is. Okay, so you're already multimillionaire, you've already made your money. So, it's very easy. He should be doing all very low beta stuff because it makes sense for him to preserve. Now, of course, if you're greedy and you wanted to get more, that's fine, but you gotta be strategic about it. I think that the public markets are, they're a sort of a unique thing. You just have such, potential for overvaluation. So, so if a guy like that was taking his money and doing the research on companies to invest in, pre-IPO, angel investing and stuff like that, maybe that would be better. But the problem with those is that, you do a lot of work for that, and the best you can do, no matter how well you do, you can still get in you're going to lose money, whatever they say. If you're good at it, if you're good at it, you maybe, you get 3 successes out of 10, something like that. And you get a couple that are break even, and the other ones you lose 100%. And that would be kind of okay, net, you make a decent return, This is kind of the thing, because the problem is what does it take to be a successful company? It takes a lot. You have a company with the perfect product, in the lead, perfect everything, and then they got to get management. They got to get the right management. And then what if they have management problems? What if they have a founder that just isn't up to it, and it takes an extra 2 years to get that founder out, or for everyone to realize, hey, the founder isn't the guy. This person is not the person. And then it takes 2 years to get them out. Meanwhile, the company's deteriorating, and the competition is getting ahead. This is all very common stuff. And of course, that's why, when you look at an Elon Musk, quite honestly, Tesla's got that figured out. This guy's got a proven track record. He is the dude. He is the dude. So there's no question there. But, in terms of these small companies, there's a lot of issues there with management. It's actually probably, I think it's, the most important thing, getting the right management. And that's why VC type firms and stuff will really focus on the management team. And they will, maybe even invest in stuff that, they're less impressed with the company, but maybe impressed with management. And, maybe they kind of use it as an example. If they put money to a company and they're like, oh, I don't know about this company. And, but, some of these managers are being pretty good. And but, we might need managers for other companies we're involved in. And, let's put some money in there and see what happens, see how they perform. I don't know. I don't know if they do that. They probably don't. What they probably do is they a VC and all those guys, everything has to line up perfectly for them to invest. They have to believe management, everything else is all 100%. So, I don't understand strong conviction. The problem is that what happens if your convictions get broken? What are the conditions where they're broken, and when do you realize it? That this is where technical analysis comes in and kind of beats out fundamental analysis. Time and time again, by the time you get some kind of a report or an SEC filing about something, the market is often already revealed that there's been a problem with the company. And that happens time and time again. You're like, oh, what the hell is going on with this company? It's trading, it's been going down, and there's been distribution, and what's going on? And then sure enough, 6 months later, there's a filing about, questions about SEC inquiry or something like that. And so you're like, what's going on? So, that's one of the powers of technical trading, is that it tends to give you a window into what's happening even before you know why it's happening. So, those are just some things to think of. All I can suggest is not financial advice, but please be careful out there. You know, I do have a lot of respect for the Kevin dude. I mean, he's obviously been much more successful than me, and he's a lot younger and more successful. So just more power to him. But just some of the stuff that he's doing, it's just like very clear that's like, yeah, you haven't gone through a cycle. You know, you haven't gone through a cycle because you just don't understand what it's like. You don't understand, like, right, we're still in a market that just it's just overall the indices are up. And I get your point. You know, it's actually very good that I'm kind of following him a little bit, because like I wouldn't normally be looking at these really high beta stocks. And it is an important thing to note that the way they're getting beat up right now, you know, this does happen in market crashes that come up is like the weakest stuff, the low quality stuff. And that's what those stocks are. They're low quality. I know all this strong conviction and stuff, but the reason they're selling off possibly is because they're low quality, because they have no earnings and they have to rely on more debt and more equity, be able to issue those things to just survive. And if they hiccup anywhere in the process, you know, they can easily like, whoops, we're no longer a going concern. And so that's why they're low quality, and that's why they're selling off. And it's interesting because, you know, I don't know if the rates are going up more. I mean, I don't know that rates going up this much should affect the market. But, you know, I'm not smart enough to say whether it should or not. All I do is I can just look at what the market's doing and follow the market's lead. So when I go out there and I say, you know, when I'm sitting out there and I had, you know, I kind of just very slow long-term, you know, the spiders, you know, kind of disinvesting in spiders. Gosh, it really went good today. You know, I just kind of keep that going on. But I had, but then looking at XLP, you know, this did even better, about the same. But in like a weekly chart, stupid thing. Yeah, in the weekly chart, you can see that like XLP is outperforming SPY right now. And so I've noticed this. And so still having a decent diversification, both of these have, you know, many stocks in them, you know, many decent size company and stocks. So I could see that this XLP over here, the green line started outperforming. And so I decided to hold on to some of that, and still have a bunch of this, the SPY. But, you know, and that's why I'm still going to hold on to that for now, because I'm just following the market's lead. I don't know if consumer staples, these companies are really going to be better. Theoretically, if inflation did go up, maybe they would be better. If more recession, blah, 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 theoretically would be better. But I don't know. I'm not smart enough. And then even if I had a PhD in economics and I spent all day, if I spent like 20 hours a day going through books, at the end of the day, you could still be wrong. It doesn't matter. You got to understand, it doesn't matter. The market's going to do what it's going to do. And it could be doing it because everyone is stupid. It doesn't matter. You have to deal with it. And that's the part that gets you. And if you want to be really smart in the market, you have to find a way to deal with that. You know, like we've found this with all these Tesla shorts, you know, some of these big guys at Tesla, oh, it's terrible. You know, and these shorts that, you know, some of these big billionaire guys in funds kind of have taken a beating. They've been short this thing for 2 years. I mean, it's just been going straight up. And even now, I mean, I give it a hard time as it's not in a great position, but it's just flattening out. I mean, long-term picture, like over years, it's just flattening out. So, you know, we see this. You see this from billionaires that you think know better, and they don't. Those people that spent this whole time short on Tesla, they're just wrong. You know, they're just wrong. You know, and it doesn't matter. Yeah, the PE is blah, 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 whatever. They weren't making money. Now maybe they're making some money. I don't even know, you know, but it doesn't matter. The market is what the market is. And the sooner you realize that, the sooner you just come to terms in accepting that. I guess here's a way to think about it. I don't know, if you're really young and you haven't lost someone, like I lost my mom. It's been a long time ago. But when you really lose someone and you know, at some point there's a point where you just kind of accept it. And maybe there's a point where you don't accept it. And then there's phases of denial. But here's the thing, you can read about it in a book, but it's not the same. It's like you go through it yourself. It's totally different. Living it and reading about it, you can't say, oh yeah, I know. I had a psychology class. No. I took a class. No, you don't know. You have to go through it. And that's what it is. So that's kind of the big picture. So, and I'll go one more. I'm really rambling today. And if you watch The Big Short, it was true that one of the big guys that bought a bunch of shares in Bear Stearns, it was, I mean, the guy lost, he got wiped out. He's like, oh, what, I had $1 billion worth of it. He got wiped out. I don't think he had to declare bankruptcy, but he might have. He just got wiped out, though. I mean, he's like probably, I don't know, maybe he's like homeless or whatever, but I'm sure he's not. I'm sure he had some money squirreled away somewhere. But the guy lost billions, and he was buying into it when Bear Stearns stock was getting hammered. He was buying more, and of course he's buying more to show. And did he have strong conviction? Yeah, he had strong convictions. What good did it do him? You know? So yeah, the only way is, you know, why do you have strong convictions? I mean, you know, you can't have strong convictions about a stock or a company. You can have strong convictions about moral things, like how you should live your life, how you should treat people, how you should blah and that and other things. But you can't have strong convictions about a company delivering something in some way. Okay, that's finally it for this one. Bye.